Good afternoon and welcome to the Bureau of Business webinar, Bureau of Business Research webinar, the 3-year economic outlook for Nebraska's economy, what we'll present for the years 2019 through 2021. This webinar is presented by the Bureau of Business Research and also the Nebraska Business Forecast Council, which is composed of a group of economists in the public, private, and university sector in Nebraska. My name is Eric Thompson. I'm the director of the Bureau of Business Research and also a member of the Nebraska Business Forecast Council. We're going to present a PowerPoint today outlining the outlook for Nebraska's economy. Before we do that, though, I wanted to let you know about a few features of this webinar. In particular, there's a chat window which you can access with at the bar on the bottom of your screen, which would allow you to chat interactively with some of the other webinar participants during the webinar. In addition, we have a question and answer window. I'll be answering questions at the end of the webinar. However, at the end of the webinar or any time during the webinar, feel free to go ahead and type in a question that you have, and I'll go ahead and answer those at the end. Lastly, we're going to have 3 participant poll questions that are going to pop up during the webinar to get the input from the webinar participants on key issues about Nebraska's economy. And then later in the webinar, we'll reveal some information regarding each of those 3 poll questions. So that's our plan for the webinar. And with all that said, I'm going to go ahead and get started with our discussion of the economic outlook for Nebraska over the next 3 years. First of all, we're going to talk a little bit about the business cycle, which is the cycle of growth in the economy, which is periodically interrupted with a recession. There's been some concern about an economic downturn recently. A few months back, there was a sharp drop in the value of the stock market, for example. There's been increases in Federal Reserve interest rates over the last year. So some have become concerned about the possibility of a recession in the U.S. and Nebraska economy. So we're going to provide a perspective on the business cycle before we get started. Then we'll talk about the outlook for the national economy. It's hard to talk about the outlook for the Nebraska economy without thinking about what's going on in the nation's economy. So we'll start with that. And lastly, then we'll focus on our specific outlook for Nebraska's economy and the key sectors in Nebraska's economy. So let's start with that perspective on the business cycle, which again is primarily composed of long periods of economic expansion, which are periodically interrupted with a recession. Those are usually much more brief. Okay, before I go into talking about the business cycle, we do have our first poll question now, and I invite all of you to answer this over the next few minutes. We'll be providing some information a little bit later in the webinar. So the first poll question is, how does Nebraska's recent population growth compare to the nation's? Has Nebraska's population growth been slower than the nation? Option B, about the same as the nation, or option C, faster than the nation? So please think about what answer you'd like to provide and go ahead and answer that poll question as we proceed through the webinar. Okay, let's talk about perspectives on the business cycle. Again, economic expansions and recessions are the 2 phases of the business cycle. And the first rule about economic recessions is, to keep in mind, is there's no rules about economic recessions. So economic recessions can start for a variety of reasons. There's not one indicator to focus on. That's why there's always so much uncertainty about when an economic recession will occur. For example, the last economic recession, the Great Recession, back 2007 through 2009, that was caused by a collapse in the financial markets related to housing, or certainly a retrenchment in the financial markets related to housing. The recession previous to that, around 2001, that was related to a spike in oil prices and perhaps some other factors. And the early 1990s recession was caused by other factors still. So the causes of an economic recession are uncertain. The second rule about the business cycle to keep in mind, or the second rule about economic recessions, is economic recoveries, that long period of expansion between recessions, do not come with an expiration date. So our current economic recovery has been quite long. It's lasted 10 years, but that doesn't mean that a recession is right around the corner. If economic conditions stay favorable, if our leaders avoid policy mistakes, there's no reason this economic recovery couldn't continue for another 5 years. So just because it's been a long recovery does not mean recession is right around the corner. What you need to do at any moment in time is look at the strengths and weaknesses of the economy and assess the state of the economy and the risk of recession. So let's go ahead and do that for the U.S. economy right now. We're going to talk about the strengths in the economy, the weaknesses, and kind of add it all up and give the bottom line. So let's start with the strengths. There's three major strengths in the U.S. economy right now. The first and most important is that we have a virtuous cycle going on right now of real wage growth in the economy. When real wages are growing, consumer spending can grow. And when consumer spending can grow, the 2/3 of the economy, 3/4 of the economy can grow as well. And businesses and services and retail and construction who have households among their customers, they can invest for the future, knowing that real demand is going to increase. And of course, when that happens, wages and employment can grow further. So we're in a very positive state in the economy right now in terms of the growth of real wages. Have been actually for the last 5 or 6 years, but it's been especially strong recently. There was also a few years back, 2017 tax reform and tax cut and ongoing deregulation in the economy. These things tend to be pro-growth and underpin economic growth around the country and here in Nebraska. Lastly, two of the key prices in the economy have been low. So interest rates are kind of the price of money. Energy prices, obviously, is something a lot of people spend money on, gasoline, heating their homes, and so forth. So energy prices and interest rates are important prices in the economy, and both of these have been quite low recently. When those prices are low, it gives people more income to spend on other things. That's a real positive for the economy as well. Let's talk a little bit about those interest rates. We believe interest rates can stay quite low for an extended period. Some have felt that interest rates were only low because of the actions of the Federal Reserve Bank and other central banks around the country, or that was a main reason that interest rates had been so low, and that when those actions started to be unwound, as has happened recently in the United States, interest rates would rise. Well, there's reason to think that the reason interest rates are low is not so much because of central bank policy, but rather the real economy and economic conditions in the real economy. The key to seeing this argument is to remember that interest rates are the price of money. And like other prices, it's determined by the level of demand and growth in demand, as well as the level of supply and growth in supply. And essentially, in the modern economy, there's reasons to expect that demand for money will grow slowly and the supply of money will rise more quickly. Why is the demand for money growing more slowly in the modern economy? Well, the reason is the types of businesses, especially large businesses, that are growing in our modern technology-driven economy. It used to be large businesses were things like steel mills, auto plants, and to build such businesses, borrowing a lot of money was required. However, modern technology-based businesses, Google, Amazon, so forth, yes, there's a need to borrow money, but a lot of those knowledge-based businesses can grow largely based on human capital rather than investment in physical capital. So that means our economy can grow more strongly without the demand for borrowing rising quite as quickly. So demand is not growing as quickly. That tends to keep prices low, like the price of money, like interest rates. At the same time, supply is rising quickly. Two of the big phenomenon which have been noticed in the global economy in recent years is rising income inequality. Obviously, there's some problems with that. And growth, faster growth in the developing world. Both of those things tend to increase the supply of money to be lended. Income equality means more of the marginal income growth is going to high wage individuals. Well, higher wage individuals tend to save more. They can afford to save more. And so if more of the income growth goes to the top 10% of households, that income growth will result in faster growth and saving. Similarly, if you look around the world, some of the faster growing economies, China, India, that are absorbing more of the world's economic growth, those countries have much higher saving rates than the United States, and for good reason. They don't have a well-developed social security system. They don't have a government with a track record of good economic policy like we have in the United States. They have more reason to be worried about the future and to save more. But as more and more of the global income growth goes to those countries, again, the supply of money to be loaned out will rise more quickly. So with rising demand for money, but much faster rising supply of money, we expect global interest rates to remain low, regardless of what Federal Reserve banks decide to do. Okay, let's go back to the issue of weakness in the U.S. economy. What are some weaknesses? Well, for a number of years, we've had some ongoing issues with the aging of the workforce. So the baby boom population that expanded after World War II and the decades after that is now starting to reach retirement age. With a larger cohort of people retiring, it's hard to grow the labor force quite as quickly. We also have some emerging challenges with workforce quality. I'll have some evidence about that to present in a minute. But we know that more and more people in our society and therefore in the workforce are being impacted by things such as substance abuse, other issues, and that has affected the quality of the workforce as well. So those are two underlying issues facing our economy. There's other weaknesses out there. There's certainly potential right now for household asset depreciation. Some parts of the country, home price appreciation has started to slow or even reverse. The stock market was down quite sharply a few months ago. Now it's bounced back since then, but who knows what the next year will hold in terms of stock markets. So it is possible that household assets will depreciate, causing a slowdown in consumption growth. That's a potential weakness for the economy. Rising trade barriers, should they occur, would be a negative for the economy, in the opinion of most economists. Also, trade negotiations. Threatening trade barriers can be a negotiating tactic, but it can be unproductive if those negotiations do not lead to trade breakthroughs that are worth the costs during the negotiation period. And it's just unclear right now whether we're going to get enough concessions from our trading partners in these trade negotiations to justify the costs of the negotiations themselves. Restrictions on immigration, there's been increasing talk about that. Of course, we want to restrict illegal immigration, but there's been some talk about restricting legal immigration as well. With our slowly growing labor force, that could be potentially negative for the economy. And lastly, federal spending increases. While our economy has benefited from a large tax cut, we might have expected federal spending to decline along with that tax cut. But what's happened instead is federal spending has actually increased as much as taxes have been cut. So that creates uncertainty going forward about whether the tax cuts will really be permanent because the deficits have expanded so much. Similarly, there hasn't been an effort in recent years to reform our entitlement system, Social Security, Medicare, and that also creates some uncertainty about whether taxes will need to go up in the future if those programs are not reformed. So there are some weaknesses that our economy faces as well. Let me give you an example, and I'll argue later actually, and I'm sure this is true, that Nebraska has fewer problems with labor quality than many other parts of the country. But even in Nebraska, there's evidence that we have some issues with labor quality. So I was involved, along with the Departments of Labor and Economic Development, in a series of skills gap surveys, analyzing the data from those surveys of employers and people and workers. Here's some results from an important skilled blue-collar occupation. When businesses were asked, is it difficult to hire people for this occupation? And if it is difficult, what are some of the reasons? So as you can see, skilled blue-collar workers are very scarce in the economy. Almost all businesses in Lincoln and Omaha indicating it is difficult to hire. Carpenters is the example we're using. Now, part of the reason for that is there aren't enough people with the required skills and experience to be carpenters. But even among people who do have those skills and experience, there's other issues related to workforce quality, like more than two in five businesses indicate that applicants have a poor work history, evidence of job hopping and other issues that make employers hesitate about hiring, make hiring more difficult. And over a third of employers report that applicants are difficult to hire because of a tendency to fail background checks. So these are the sorts of labor quality issues I was referring to earlier that also might be impacting the available supply of labor. So we did focus a little bit about weaknesses over the last few minutes. What's the bottom line? Because remember, there were a lot of strengths in the U.S. economy as well. Well, the bottom line is pretty good for the U.S. economy. We don't anticipate a recession over the next 3 years. The economy may slow at the end of 2019 into 2020, but no recession unless there's a major policy mistake, such as a trade war, major trade war, or some other type of policy mistake. We expect GDP to grow in the range of 2 to 3% in 2019, 2020, and beyond. And again, this is assuming no major spending increases. We've already done that in the last few years. We don't expect more of that. Only limited trade restrictions, so not a trade war. We'll get a settlement with China, Europe, some of our trading partners this year. And while there might be some restrictions on legal immigration, such as cutback in refugee settlement, we expect those to be limited. And so in that positive policy environment, it should be a good situation for growth, including job and wage growth. Okay, so now we're ready. We've got that background to talk about the Nebraska economy. The U.S. economy is telling us the speed limit for Nebraska's economy is pretty high. U.S. growth will be solid, which creates a positive environment for Nebraska's economic outlook. So what do we find? Well, I would say there's two key things to remember from this Nebraska economic forecast. There are struggles in agriculture, as we all know, and those are going to impact the outlook for Nebraska's economy. It's just hard for Nebraska's economy to grow quickly when agriculture is struggling. And there's also a few key underlying strengths in Nebraska's economy that allow us to keep growing even when our major industry of agriculture is struggling. So we'll talk about both of those things. Okay, and remember that first poll question? It was a few minutes back. Let's go ahead and look at some results that are pertinent to that poll question. We see that 58% of you expected that Nebraska's population was growing slower than the nation, 31% about the same as the nation, and 12% optimistically thought Nebraska would grow faster than the nation. Well, let's go ahead and look at the results on that. From July 2017, July 2018, those are the months the Census Bureau uses. Nebraska actually matched, or I guess was slightly below, but essentially matched Nebraska's, the U.S. population growth. Nebraska grew by 0.61%. The U.S. grew by 0.62%. And there were similar results for previous years. The last 2 years, Nebraska's grown only slightly less than the U.S. in terms of population growth rate. And 2 years ago, Nebraska actually grew a little faster. So Nebraska's kept up with the U.S. in recent years in terms of population growth. So those who said about the same, I think were the most right. The reason for that is actually related to one of Nebraska's underlying strengths for its economy, that we're a good place to raise a family, to have a family. We tend to have higher birth rates in the state of Nebraska. If you look among all the states, Nebraska is fifth in terms of its birth rate. About 70 births per 1,000 women aged 15 to 44 compared to about 60 nationally. So there's much faster population growth among young people in Nebraska because of this higher birth rate. This essentially allows Nebraska to maintain a decent population growth rate even if there is outmigration from Nebraska. We know we face challenges with domestic outmigration, more people moving to other states than moving back to Nebraska. But even with that, because of our higher birth rate, we can match U.S. population growth. And that's one of the key underlying strengths of Nebraska's economy. Its higher birth rate means that we can maintain solid population growth. Okay, well, we've answered the first poll question. Let's ask the second. Will Nebraska be able to return to its pre-recession peak for manufacturing employment, which was back in 2007? And we had over 100,000 manufacturing jobs, in fact, 101,400 manufacturing jobs, according to the Bureau of Labor Statistics. So there's three options. Nebraska's manufacturing employment has already returned to its pre-recession peak as of 2018. Nebraska manufacturing employment will return to its pre-recession peak sometime during our forecast period, 2019, 20, or 21, or Nebraska will never get back to that pre-recession peak. The downward is a long-term downward trend in manufacturing employment. So go ahead and provide your expectation on poll question 2, and we'll provide the answer a little bit later in the webinar. Okay, moving on then to the outlook for Nebraska's economy. A key factor, as we indicated, was Nebraska agriculture. So Nebraska agricultural incomes have fallen back to the $2 to $3 billion range, much below the peaks of $7 billion of farm income seen in 2011 and 2013. Now, no one expected that $7 billion annual income to continue indefinitely, but incomes have fallen much further than we might have hoped. So that's a negative for Nebraska's economy. It affects farmers and also the businesses that supply farmers. The reason for this is largely lower crop and livestock prices. So the commodity prices have been poor, limiting growth in farm income. The good, I don't want to say good news, the moderately positive news going forward is there should be modest improvement in commodity prices in the coming years as the trade disputes get settled and just a general modest improvement in prices. There should be an increase in government payments, 2019, 2020, 2021. That'll help as well. Obviously, we'd like to have high farm incomes due to private returns, but given in this period, higher government payments will be of some help. Lastly, there should be lower fuel prices during the forecast period with lower energy prices. That'll be a modest positive for farm income, and perhaps some reduction in property tax burden as well, as assessments start to catch up to farmland prices, which have started to fall in recent years. There also obviously could be some relief from the Nebraska legislature in terms of property taxes. Okay, here's our specific outlook for farm income going forward. We can see it's fallen to right around $2 billion this year, but we think it can bounce back in 2019 to about $2.5 billion. Again, as the trade disputes get resolved, there's also some increase in farm payments in 2019 that should help. And then we should be able to maintain that income level 2020 and 2021, again, as there's some increase in commodity prices and all the factors we talked about in the last slide. So continuing to be a challenging period for Nebraska's ag sector. And that sector, unfortunately, will not be able to prosper as much as we'd like or contribute as much as we'd like to Nebraska's economic growth. However, it's worth mentioning that there is long-term economic strength in Nebraska's agricultural sector. We'll continue to be a place that receives a lot of investment and expansion in agriculture in the long run. Part of that is because we have such a large agglomeration of production in our state. Livestock production, crop production, and a variety of types of livestock and crops. That concentration of activity makes us a great place to make new investments in agriculture in our supply chain or extending our supply chain. We also have the Ogallala Aquifer, which encourages investment in ag-related industries in our state, because in Nebraska, we know we'll always have a pretty good crop because of our substantial irrigation capacity. The other thing to keep in mind, and this is sort of another key underlying strength of Nebraska's economy, is that even when farm incomes suffer, Nebraska is able to maintain its high and growing level of agricultural production. And that can be a key if you think about all the ag processing industries around the state, the ethanol industry, the meat processing industry, other types of industries that process agricultural outputs, crops and livestock. As long as our production can stay high, ag can continue to contribute to the Nebraska economy. And that's a key underlying strength of our economy going forward. Although obviously if farm incomes stay too low for too long, that could start to impact our farm production as well. Okay, let's start to look at a few particular sectors in the Nebraska economy: construction and manufacturing. We're expecting broad-based growth in the construction sector. Residential construction will grow, commercial construction will grow. There'll be large projects as well, especially in 2019, 2020. And will be, I think, a lot of road building in the state as well. So a good broad-based growth for the construction sector. Also positive conditions for manufacturing. Should be growth in most parts of the manufacturing sector, including machinery manufacturing. As I indicated earlier, there's especially good conditions for businesses that process agricultural commodities going forward. So let's look at some specific results. Here's our outlook for construction and mining. That's mostly construction in our state. You can see that we're expecting to add about 3,600 jobs in the next 3 years. Solid growth, over 2% growth in the construction sector going forward. In manufacturing, and here we'll get at the poll results. So about 28% of you said that manufacturing employment had already returned to its pre-recession peak. Over half, 50%, said we would return to that peak during the forecast period, and 20% said would never get back to that peak. Well, what is our outlook for manufacturing? Remember, our previous peak was 101,400 manufacturing jobs. You can see that during our forecast period, in particular 2020, we feel we'll get back to that peak employment from 2007. And by 2021, Nebraska manufacturing employment will be back up over 102,000. So we'll reach our pre-recession peak, although you'll see that our manufacturing employment is down from the peaks reached in 1997 and 1999. So if you said during the forecast period that was the correct answer, but it is true that we won't be able to make it back to the 1999 peak anytime soon. Okay, let's look, before we get started looking at some other sectors, let's ask our third poll question here. So go ahead and answer this one as well in the coming moments. The poll question is, which Nebraska industry will have the fastest rate of employment growth in 2019, this year? The services industry, the construction industry, or the transportation and warehousing industry? We're going to talk about services, transportation, warehousing, retail, a few other industries right now. Services, we're expecting broad-based growth in that sector. The healthcare industry will continue to expand as incomes rise, population rises as the population ages a bit. Business services should continue to grow, including the high-wage professional services industry. And then leisure and hospitality should continue to grow as well. Restaurants, lodging, entertainment, etc. We're also expecting broad-based growth in financial services. Real estate, banking, other financial services should grow. It could be that insurance carriers will be more stable than growing in terms of employment, but overall financial services will expand. Let's look at some specific results. We're expecting 5,000 to 6,000 new jobs per year in the services industry. Again, that includes healthcare, business services, and leisure and hospitality. So good, strong growth. This sector will account for well over half of the job growth in Nebraska's economy over the next 3 years. We're expecting financial services to expand by about 3,000 jobs over the next 3 years, about 1,000 jobs per year. So that'll be another good source of job growth. However, the situation will be a little more challenging in retail trade and transportation. So the retail trade sector is impacted by the Amazon effect, or more generally, online competition for bricks and mortar stores in our state. And that'll affect employment here locally. And obviously, there's a lot of potential for labor-saving investment in retail as well, the self-checkouts and so forth. So we think retail trade will actually drop a few jobs here over the next 3 years. Similarly, transportation is expected to lose some employment over the next 3 years. The long-haul trucking industry is impacted by labor shortages. And as America's electric utility industry changes its fuel source slowly over time, there may be less coal hauling opportunities than we might have expected, which will impact employment in rail. So these two sectors are expected to shed some employment in the coming years. So you can see the retail trade sector is going to lose about 900 jobs or 300 jobs a year. Not a big loss, but this sector is no longer adding jobs in our economy. And the transportation and utilities sector is also going to lose about 900 jobs over the next 3 years. So I think we have enough information to look at the answer to the third question. Let's look at the poll results now. We can see that over 2/3 of people indicated the services industry would have the fastest rate of employment growth. About a third said construction, and a few folks said transportation and warehousing. And what we've seen from we'll show you some specific results here for 2019. We can see that services, while adding a lot of jobs, the rate of growth is just 1.5%. The rate of growth is actually faster in construction, 2.5% in 2019, really faster throughout the whole forecast period. And as we indicated, the transportation and warehousing is expected to lose a few jobs in the coming years. Okay, let's go ahead and finish up our forecast here. What about overall non-farm employment in Nebraska? We think the Nebraska job growth rate will slightly lag the U.S. job growth rate. Nebraska has fewer discouraged workers. Those are workers that have left the labor force because of a lack of opportunity. In some parts of the country, there's still pockets of these discouraged workers, but the unemployment rate has been quite low in Nebraska for quite some time. We don't have as many of these discouraged workers to draw back into the labor force, limiting our potential for growth. Obviously, as we've indicated throughout, struggles in agriculture also limit employment growth in the Nebraska economy. So what is our specific outlook? We think job growth will stay strong in the U.S. this year, but then slow quite a bit in 2020 and 2021. It'll be a little below 1% in Nebraska throughout the forecast period. So we will lag the U.S. a little bit during this period. However, there will be pretty good income growth in Nebraska. We're expecting solid growth in real per capita income. About half of that will be because people are going to work more jobs, more hours per week. And approximately half of that will be due to rising real hourly wages in Nebraska. And again, while I showed you those results for carpenters earlier, while Nebraska does have its struggles with workforce quality, I think those struggles are larger in many other parts of the country. And I think an underlying strength of our workforce is the relatively high quality, which will allow our wages to grow perhaps even a little faster than nationwide. So here's our outlook for other key measures in the economy. Non-farm personal income can grow by about 4.5%. Taxable sales won't grow as quickly as non-farm personal income. Why is that? Well, a big part of that is because the fastest growth in spending is in things like healthcare, which are not subject to taxable sales. There's also some concern that incentive programs and so forth are reducing taxable sales as well, or the growth in taxable sales. You can see that CPI will be around 2%. Population growth will be around 0.6 to 0.7%. I think if you look at the non-farm personal income, the CPI, which is inflation, the population growth, you notice that real per capita income, personal income growth minus inflation minus population growth, should run at between 1.5% and 2% over the next 3 years. That's a real positive rate of real wage growth, and that kind of gets back to that early slide in the presentation. That virtuous cycle of self-reinforcing growth seems to be present in the Nebraska economy and hopefully can continue throughout these next 3 years. We're expecting that it will. Okay, so I'm going to wrap up the presentation here, but please remember the 3 underlying strengths of the Nebraska economy that give us some optimism about the future. Remember that agricultural incomes are critically important to our state, but agricultural production also matters, and production is staying high and growing despite the struggles in agricultural income. Nebraska has a relatively high-quality workforce. That's a big positive for economic growth in our state, gives us a competitive advantage. And Nebraska has those higher birth rates, so our population and workforce can grow even if we continue to struggle some with outmigration. So thank you for your attention, and let's go ahead and answer any questions that people have had or will have. The first question, what are some of the downsides to the increase for human capital and the decrease in capital goods? Well, I think it's just a substitution among different types of capital. So we know that for incomes to grow, the capital labor ratio needs to increase. In the old economy, that was largely a capital to labor ratio driven by physical capital. Increasingly, it's a mix of physical capital and human capital, the skills and education and on-the-job learning and health level of our workforce. So there isn't an inherent negative with this organic change in the economy and the types of capital that we have, but we sure need a deepening of capital, human capital and capital goods to maintain a rising standard of living. Second question, of that $2 billion ag income, what percent is from sales in the U.S. versus international exports? Well, that $2 billion in income is derived from about $20 billion in agricultural sales, the vast majority of which occur in the United States. I don't have the exact percentages for exports. It's a significant number, probably somewhere 10, 20, perhaps 25%. But it's primarily domestic markets. Third question. The Department of Revenue has just released January revenue numbers, third month of lower than forecast receipts. How is this related to federal tax changes, or what could be the possible reasons for that? Well, as we indicated throughout, there are some concerns about the economy. We have a forecast that the economy will have solid but not rapid growth. So that may be one of the things at play here, that the economy is growing, revenue is growing, but it's not growing as quickly as some had hoped. And it is true that it's been a challenging environment to predict revenue because we've had big changes in the tax code through the tax reform and cuts from late 2017, early 2018 that we discussed. The state of Nebraska made some changes to its own tax code so that those federal tax changes would be revenue neutral in terms of Nebraska's own income tax revenue. However, it's hard to do that with complete precision ahead of time. And it may be that we weren't able to fully account for those federal tax changes in our own changes to our own tax code, and it wasn't quite revenue neutral. So that's possible explanation as well. Lastly, and it's okay to ask questions still, but the last question we currently have, where can we see data or studies on workforce quality? The studies we've done, again, with the Nebraska Department of Labor and the Nebraska Department of Economic Development, are on the Nebraska Labor Market Information website. So studies have been done over the last few years, and it'll give you some information on workforce quality and then just general information about skills gaps in Nebraska's workforce. One last question. Yes, thank you. Dylan Cornett from the Department of Labor has provided a specific website, which you can see there, www, obviously, .dol.gov. I believe it says LAS. Well, I want to thank everyone for participating in our webinar and for your time and attention and for the very thoughtful questions that you asked. We'll be back with another Bureau of Business Research webinar in a few weeks, and we'll be sending out notices about that. I hope you'll be able to participate in that as well. Thank you again for your time and attention.